If you put $10,000 into gold in 2015, you'd have about $39,000 today. But if you put that same $10,000 into Bitcoin, you would be a multi-millionaire with over $2.2 million, purely from holding. In this video, we aren't guessing the future. We are breaking down exactly what happened over the last decade, year by year, comparing the ultimate safe haven to the ultimate digital asset. For generations, gold has been the undisputed king of wealth preservation. It's physical, it's scarce, and governments buy it by the ton. Bitcoin, on the other hand, was born just over a decade ago as a digital alternative, hard-coded to a cap of 21 million coins. Both are often bought to hedge against inflation and government money printing. But looking at the data, they behaved very differently. Let's rewind to 2015 and track a $10,000 investment in both. Between 2015 and 2016, Bitcoin was gradually gaining traction, but 2017 was the year it commanded global attention. In a single year, Bitcoin surged over 1,300%. That $10,000 was suddenly worth nearly $500,000. Meanwhile, gold moved a steady 12%. But volatility cuts both ways. In 2018, the crypto winter hit. Bitcoin crashed 73%. Here is where the data gets interesting. During that severe crypto crash, gold barely moved, dropping just 1%. It proved exactly why institutions use it to anchor their portfolios during turbulent times. Then came 2020. The pandemic forced central banks to print money at an unprecedented rate. Investors scrambled for hard assets. Gold did exactly what it was supposed to do, returning 25% in a year. But this was the exact moment the narrative around Bitcoin shifted to digital gold. Institutional money started entering, and Bitcoin exploded by 302%, going from $7,000 to nearly $29,000 per coin. The performance gap was widening aggressively. Fast forward to 2022, the ultimate stress test. Inflation was out of control, and the Federal Reserve hiked interest rates at the fastest pace in modern history. Throw in the collapse of FTX, and Bitcoin faced a brutal reality check, losing 64% of its value. But look at gold. While stocks and crypto were decimated, gold ended the year positive, up 0.4%. The data clearly shows, when interest rates spike and panic ensues, gold provides the stability that Bitcoin historically lacks. But the picture changed again in 2024 with the approval of spot Bitcoin ETFs. Wall Street had formally adopted Bitcoin, pushing it past $96,000. But as we stepped into 2025 and 2026, macroeconomics took over. Amidst the Hormuz crisis and new global tariffs, gold had a historic breakout, soaring 64% as global panic set in. Meanwhile, Bitcoin has seen a sharp 31% drawdown early in 2026, retreating into extreme fear. When geopolitical risk peaks, traditional capital still flees to physical gold. So, what does a decade of data tell us? If you want absolute wealth preservation with minimal drawdowns, gold has proven itself repeatedly, weathering rate hikes and wars. But if you are looking for asymmetric growth and are willing to stomach crashes of over 70%, Bitcoin has historically severely outpaced every traditional asset class on the planet. The numbers speak for themselves. Roughly 300% returns for gold against over 22,000% for Bitcoin. Holding both assets serves completely different purposes in a portfolio, and understanding this historical data is crucial. If you found this breakdown valuable, leave a like and subscribe for more data-driven market analysis. Thanks for watching.